Hello everybody, it's Yashar here, back again with another video. And in this video, I'm going to talk about my own stocks portfolio and update you on my positions, the return of the portfolio, and a few changes to this portfolio during the last 3 weeks. If this is your first time visiting my channel, this is a stocks portfolio that I started in January 2021 after we bought our house using my old investments. So starting from 2021, starting from scratch, I slowly dollar cost averaged into the stocks that I found them undervalued after my research on their business and financial statements. In this channel, I don't tell you what stocks to buy because I don't know about your investment goals, your risk tolerance, and your financial situations. But I will tell you what I am doing with my own money, and I show you my process of evaluating different companies and my process of long-term investing. I will try to update you every 2 or 3 weeks with full transparency and show you the exact performance of my portfolio and also my wife portfolio, which we consider them a one grand portfolio. This is the Excel sheet that I use to track my personal investments and also my wife investments. As you can see here, we have a mix of flat and red positions and only a few really green stocks here like Google, TD, and Aritzia. Other than these 3 stocks, most of the companies that we have are flat or in red, and some of them like Meta is down significantly over the last year. The important metric here is the total return of the grand portfolio, which is minus 6.2% from January 2021 to this date, which is not amazing, but I'm not worried about the short-term performance of my stocks as the overall market is down even more during this time, and it is not only my portfolio. The portfolio annual dividend is close to $1,350 per year, which is totally tax-free as all of our dividend stocks are inside TFSA, and the yield of the portfolio is 1.77%. This is a nice graphical representation of the stocks we hold in this grand portfolio. The majority of these positions are tech and financial stocks mixed with some REITs and consumer discretionary stocks and also a diversified holding, which is Brookfield. Brookfield business is so diversified that I can consider it as an ETF itself, with exposure to real estate, renewable energy sector, energy infrastructure, industrial sector, asset management, and insurance businesses. As you can see, I tried to balance this portfolio in the last few months by consolidating the holdings inside our stocks portfolio into these 9 companies that I researched them very well. While the short-term performance doesn't really matter, I always like to compare the performance of my portfolio with S&P 500 as the average return of the US market in the long run. And my goal is to be able to beat this index in terms of the return by a good margin over the next 10 years. This is where I track the returns of our grand portfolio against S&P 500 and also our initial deposits. As you can see here, we consistently deposit cash and buy stocks in these portfolios, and fortunately the performance of our stocks portfolio was much better than S&P 500 so far, which is mainly due to good performance of Canadian stocks, especially Aritzia, TD, and EQ Bank, and of course Google, which is outperforming S&P 500. It is interesting to see that in both bull markets and bear markets, in both good and bad markets, this portfolio is pretty much outperformed S&P 500, which is something I'm really happy to see here. Okay, now let's look at my personal Wealthsimple account, excluding my wife holding in her own portfolio. Overall, I have close to 56,000 Canadian dollar worth of stocks in this account at the moment. My TFSA, which is mostly Canadian companies plus Google, performed very well, I would say really good in this bad market, and it is up 1.7%, which is good performance compared to the overall market. I analyzed pretty much all of these stocks before on this channel, and I will leave a link to those videos in the description box below. In the US side of my TFSA, Google is the only position I hold, and as you can see, I currently own 50 shares of Google in my TFSA. Google is one of my best performers so far, and it is up 9.7%, which is a good performance, especially considering the recent market corrections. Google valuation is absurdly cheap at the moment, and I want to add to my Google position in RRSP at this price range. On the Canadian side of the account, I didn't have a major change since the last time, but I bought the dip on most of my holdings in the last 3 weeks using the dividends I received from my REITs, TD and Bank of Nova Scotia, and also my new deposits. Here we have Aritzia, which is a growth-focused Canadian fashion stock. I'm up 24% on this position at the moment. This is my best performing stock in this portfolio at this point in time. And now I own 80 shares of Aritzia in my TFSA. My wife also holds close to 140 shares of Aritzia in her TFSA, and overall this is our largest position in our portfolio so far, which is a surprise because I didn't really anticipate that Aritzia would be able to perform so well and post those amazing revenue and income numbers in a bear market. I plan to hold all of my Aritzia shares at the moment. The next position is Brookfield Asset Management. I am down 8% on this position so far. They recently announced a special distribution of their asset management business as a separate publicly traded company, and I will use that distribution when it happens to add to my Brookfield position. I don't have plan to buy more BAM at this point, as I'm happy with the number of shares I own. The next two positions are Bank of Nova Scotia and EQ Bank, which are both amazing Canadian banks. I'm down 15% on Bank of Nova Scotia and 5% on EQ Bank so far. Bank of Nova Scotia had actually the worst performance between my stocks, my Canadian stocks in my TFSA so far. But I just basically bought 5 more shares of Bank of Nova Scotia this morning, as it is extremely undervalued in my opinion, and will continue to add to Bank of Nova Scotia position at these levels. I don't have any plan to sell my Bank of Nova Scotia shares at least for the next 10 years, and I will just try to add to my shares during these dips. I also bought a lot of EQ Bank shares before the recent run in the share price, and I added a few shares again last week, so I would be happy to hold my current shares in EQ Bank unless the share price drops again. Next, I have two REITs, Granite REIT, which is an industrial real estate company with many large warehouses around Canada, US, and Europe, and Killam REIT, which is a residential real estate company in Eastern Canada. Both are amazing REITs with both growth potential and consistent monthly dividends. I'm down 9% on Granite and 15% on Killam. I bought a few more shares of Killam in the past 3 weeks to bring my average cost down, and definitely want to add to Granite via new deposits in the coming weeks, if, of course, the share price remains the same. Finally, we have TD Bank, which is up 4% for me. TD is also one of the positions that I will probably never sell it, and I will try to just collect those juicy dividends and reinvest that cash flow into my other stocks. Overall, I'm really happy with the performance of my stocks inside my TFSA. Next, let's look at my RRSP. I plan to hold most of my US stocks here. RRSP portfolio is down a whopping 31% so far. My biggest investment here so far is Meta Platforms or Facebook, which is down 60% with a terrible performance. It is a scary number if you lose more than half of your investment, but this is only a loss on the paper, as I am absolutely sure that Meta will rebound in the future, as it is definitely undervalued here. I'm waiting for a paycheck through my business to come around and be able to average down on Meta, and I hope Meta price doesn't jump before my paycheck coming in. I also own 25 shares of Google in my RRSP, which is down 6% at the moment, and as I said before, I plan to add to my Google in RRSP as well. So overall, my plan with all of these stocks that I show you here today is to hold or add to them during these dips. I did not sell any of these stocks during the recent market downturn, and even if we go down another 30%, I will still hold these stocks as I analyze each and every single one of them before I buy them. And therefore, I'm not going to emotionally react to the price action of these stocks. These are my assets and I know the value of my assets, so I'm not going to sell them for low offers out there. There you are, guys. I hope you enjoyed the video and my transparency of showing you all the positions I have in my own stocks portfolio and also the performance of our stocks. If you enjoyed the video, consider subscribing to the channel to see similar videos. Thank you for watching, and I see you guys in the next video. Farewell.